Welcome to another episode of the Planning for Retirement podcast. I'm your host, Scott Nelson, along with my assistant, Elisa Zaras. Today, we wanted to talk a little bit about what we can anticipate now that all the election results are in. How that's going to affect your finances, the economy, what we're speculating about on other fronts as well.
Hi, everyone. Elections bring change. And with that comes a mix of uncertainty and opportunities. So whether you're thrilled, disappointed, or somewhat in between, now's the time to focus on what's next.
So obviously with your finances, you want to be smart and make wise decisions based on the information that we have available. With the outcomes of the recent 2024 election cycle, here are some things that we anticipate coming down the pipe. Probably the most significant one from my perspective is that it's almost a lock that President-elect Trump and the Republican Congress will extend the Tax Cuts and Job Act's tax rates for income taxes another 8 years. We were under the impression that we'd need to do a lot more Roth converting a lot faster because of those sunsetting at the end of 2025. We no longer feel that is the case.
Exactly. Tax policy and cuts or not, it impacts everyone. So from individual taxpayers to businesses, if you're an investor, keep an eye on how corporate taxes might change. So as they affect stock market performance and dividends.
President-elect Trump is notoriously pro-business. We anticipate it should be a very positive season for investors and the markets overall based on U.S. domestic policy. Internationally, the world has its challenges, to be sure, but based on what we're seeing, we think it should be a net positive for investors in the next 4 to 8 years.
So with that, how do you think the markets are going to be looking in the next year with the new president coming in?
We've seen already, just since the election results, the markets had a very positive reaction. Markets hate uncertainty, knowing that a party controls both the House, the Senate, and the White House, and that it's more of a pro-business environment, I think bodes very well for the markets and investors.
And I think sometimes people get fixated a little bit on the short term with that volatility in the markets. Just know that it does always fluctuate.
Yeah.
And but yeah, like you said, I think it's going to be a more positive this go around.
No, we saw some really interesting things. We had the Fed chair make it known that the president can't fire him, and he's not going to be intimidated. We have to give him full props. I think he has orchestrated a relatively soft landing with the economy. I thought it was interesting last week when they announced that the Fed rate would be lowered by a quarter point, and the markets actually went lower because in the rest of his statement, he said, we don't think we will lower rates as many times in 2025 as we had originally thought. And the market said, well, we don't like that much. But then it bounces. It comes back. I would say since the year 2000, markets have been so much more volatile than they were throughout the history prior to that. My personal opinion is that's for two reasons. One, there's so much more computer/algorithmic trading that takes place. And so those reactions, and that's exactly what they are, is they're reactions to news. are instantaneous, and the market reacts, and then it reassesses its reaction, and then it corrects itself. It's just how it is, but lots of volatility in the market. And the other is the news cycle, which used to be a 24-hour news cycle. You'd watch it, the 6 o'clock news at night, and then you'd wait for that to come around again the next day, or the newspaper would come out once a day. Now we might have a 10-second news cycle. Whatever's at the top of your feed won't be there when you go back to look at it again in 2 minutes.
Yeah,
And
exactly.
all of that impacts trading.
It does. And healthcare is another key area. So changes to Medicare, insurance markets, drug pricing, they can impact both consumers and the healthcare sector.
Yeah, we saw a lot of that this fall. Well, I think, we have to acknowledge the assassination of the president of United Healthcare, the largest insurer in the
Yes.
country. So, yeah, obviously, healthcare impacts. We saw the Biden administration force the prescription drug plan donut hole coverage gap, call it what you want to, closed faster than it was on schedule to do so. That has a lot of impact on those stocks that are affected in that arena.
Especially if you're nearing retirement, that's something that you really need to look into
Yeah.
for that area.
So, no, overall, I'm cautiously optimistic about the outlook for the markets based on the election results. And it's not to say I'm inviting President-elect Trump over for dinner or anything. I mean, yeah, there are people that definitely are not his biggest fans. But in general, I think for business and for policy, this administration bodes well for the United States.
Yeah, so don't get fixated on the short term. If you're thinking about opportunities, sectors like renewable energy, defense, technology might even see growth depending on new policies. So diversification is key.
Yep. Yep. Diversification's key. No, we've had several people come in and they made radical changes against our recommendations in their portfolio, anticipating a different election outcome. And gosh, they have just forfeited so much earnings in the portfolio that they could have had.
I think it is good to take a review of your portfolio. It's always good to review it, but don't make those drastic changes because of an election result or because of what you might think will happen.
Yeah, trying to time the market never works.
No.
Almost never. I could give you several personal examples that I hate to bring back up where I tried it, but oftentimes we don't realize all the unintended consequences that create a different outcome than we think based on what we think might or might not happen. And so often things we fear don't happen anyway.
Yeah, they don't. One thing that we can focus on for ourselves, for our personal finances, you can always remember your budget. If inflation or changes in the cost of living are expected, make sure your spending and savings plans align with potential shifts. So whether it's a positive shift or not, you need to always revisit your budget.
No, I think it's wise at least once a year to just do a wholesale review, right down to the nuts and bolts of your financial plan, spending goals. What have you achieved? What do you still want to do? Things change. It's good to review at least once a year and make adjustments as necessary. And it's good to have a disinterested third party. Let's face it, we're emotional about our money, which means sometimes we're not as rational about our decisions with money as we should be. Instead, we try to find logical justification for the emotional decisions we already made. So it's good to have a good advisor, somebody that's knowledgeable. Um,
It's good to have an advisor as well if you own a small business, um, especially around election time, just to pay attention. Scott here, he's always reading up to date on tax benefits, credits. I mean, you can talk to your accountant as well, but as an advisor, he is up to date in all of those things. So it's just good. It's good to have someone look at your portfolio. We can do it for free. We love to help. Um, and beyond finances, elections are also a reminder of the importance of staying engaged. Policies affect education, infrastructure, and community development. So your voice really does matter, even after votes are counted.
yes, please. Great point. Reach out to your elected representatives at all levels. Stay engaged in what's going on. Keep them accountable to us, the people. There's so many positive things that we can get done if our representatives will pay attention and be the squeaky wheel. I think there are several things that, if changed, could make such a huge difference.
That's true. This has been such a thought provoking conversation, and elections mark new beginnings. And while change can feel uncertain, it's also an opportunity to adapt and grow.
Yep, for sure. And the only constant is change, right? So, as much as none of us like it, it's something we have to deal with and be prepared for, but it does not have to be scary. Um, if you're prepared, you've reviewed your plans, then that's awesome. So, whether it's your investments, taxes, day to day budget, um, staying proactive is the best way to navigate post election landscape. Thanks for tuning in to Planning for Retirement. We appreciate your attentiveness, and if we can be of any service, please contact us.
And until next time, keep your plans flexible and your goals clear. Stay smart and stay informed.
Thanks, everyone.